This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Wednesday, July 1, 2026, and this is the New York session. Now, let's get into it. Bitcoin is stuck in neutral at $58,609, while the rest of the market refuses to follow suit. We are seeing a stark divergence. Total crypto market cap is holding $2.12 trillion, yet the Fear and Greed Index has plunged to 14 out of 100 extreme fear. Meanwhile, assets like Stellar are surging 12%. Let's figure out if this is a trap or a pivot. We don't have a dense calendar of macro releases today, but we do have structural shifts happening in real time. First, PayPay, the entity behind Binance Japan, is pursuing a $1.10 billion Nasdaq IPO. That is a massive gateway for traditional capital entering the crypto ecosystem via one of its largest exchanges. Second, the U.S. Senate housing bill now includes a CBDC ban. This is a regulatory milestone that removes a long-standing headwind for decentralized assets. And third, TD Securities is calling the NYSE tokenization an institutional turning point, which directly impacts the utility thesis for Oracle and infrastructure tokens. Apex, what's the priority here?
The PayPay IPO is the liquidity event to watch. But strategically, the CBDC ban and tokenization news suggest the floor for crypto regulation is hardening, even if price action is weak. It validates the infrastructure plays over pure speculation.
Here is the snapshot as of 9/19 ET. Bitcoin sits at $58,609, up just 0.27%. Ethereum is at $1,571.51, gaining 0.87%. But look at the movers. XLM is up 12.2% to $0.19. Cardano is up 6.12% to $0.15. Solana is up 3.54% to $74.84. Conversely, BNB is down 0.42% to $543.16, and LTC is off 1.71% to $41.27. Total volume is heavy at $79.27 billion, yet Bitcoin dominance is static at 55.38%. The narrative right now is clear. Bitcoin is stagnant, but alts are running. Grid. Let's look at the charts. Is Bitcoin truly consolidating, or is it rolling over? Three headlines are shaping this session. First, Cointelegraph reports that Bitcoin futures demand falls to 2024 lows. Are institutions exiting the market? Second, CoinDesk notes that U.S. Senate housing bill includes CBDC ban. Third, Cointelegraph highlights that Iranian crypto outflows spike 700% after U.S.-Israeli airstrikes. SPECTER, let's start with the risk. That 700% spike in Iranian outflows, is that organic demand or a distortion?
It's a distortion. We are seeing geopolitical panic driving capital flight, not investment. That 700% spike is reactive, not proactive. It creates noise in the stablecoin flows, particularly affecting the integrity of USDT and USDC during windows of volatility. It explains some of the erratic volume, but it isn't a sign of healthy market growth.
And on the institutional side, the headline says futures demand is at 2024 lows. CIPHER, what does that tell us about where the smart money is hiding?
It tells us they aren't in Bitcoin futures. The leverage is gone. Institutions are either fully hedged or completely sidelined. What we're seeing instead is the $79.27 billion daily volume rotating into spot alts. The vacuum in Bitcoin futures is being filled by retail and speculative hot money chasing the XLM and Cardano pumps. It's a liquidity migration, not a capital exit.
So the fear is real, but the price action doesn't match it. Pulse, walk me through that disconnect. Exactly. The Fear and Greed Index is at 14. That is extreme fear. Usually when you see 14, you expect capitulation. But look at the 7-day trend. It's rising to 12. The fear is entrenched. Yet, XLM is up 12% and Cardano is up 6%. The crowd is terrified of Bitcoin, so they've fled into high beta alts. It's a classic flight to safety inside the crypto universe itself. The sentiment data shows panic regarding the macro/Bitcoin link, but the price action shows euphoria in specific sectors. That's a contradiction waiting to resolve.
Let's zoom in on Bitcoin. It's at $58,609, essentially flat. Grid, where are we technically?
Bitcoin is in a tight consolidation range. We are seeing a lack of upside momentum. The price is hovering right around $58,609, which has acted as a minor resistance after the earlier push. We haven't broken the $59,290 high from the last 24 hours, nor have we crashed below the $57,945 low. It's a standoff. The chart is telling us there is zero conviction. Neither buyers nor sellers want to commit capital here.
That aligns with the futures data. The 2024 lows in futures demand mean there is no leveraged bid pushing that $59,290 level up. The only reason it hasn't dropped further is because the spot sell pressure is also thinning out. It's a low-volume equilibrium. Until new institutional capital enters the derivatives market to provide leverage, Bitcoin stays at $58,609.
And that's the risk. A low-volume equilibrium is unstable. If that Iranian outflow data starts causing friction in the stablecoin pairings, or if the core scientific disappointment weighs on minor confidence, which we saw in the headlines, there is no buyer to catch the falling knife. The downside is unprotected.
So Bitcoin is a holding pattern. Let's move to the leader of the pack, Solana. Solana is up 3.54% to $74.84. Grid, is this a breakout?
It's a breakout above local resistance. Look at the 24-hour range. We moved from a low of $72.03 up to $74.84, nearing the high of $75.58. The candle structure is building a higher low. Compared to Bitcoin's flatness, Solana is showing relative strength. It's breaking out of a consolidation wedge. Technically, it's signaling that capital is rotating into high-performance layer 1.
And it's getting funded by that same rotational liquidity. Since Bitcoin futures are dry, the money that would have been used for Bitcoin longs is finding homes in Solana perp books and spot orders. You're seeing increased order book depth here. It's not just hype. There is actual flow supporting the move from $72.03 towards $75.58.
But remember the sentiment. This 3.54% gain is happening while the broader market is in extreme fear at 14/100. Retail is buying Solana because they are afraid to touch Bitcoin. It's a risk-on trade within a risk-off environment. That makes it fragile.
Fair point, it's fragile but active. Let's look at the biggest mover, Stellar. XLM is up 12.2% to $0.19. That is the top gainer. Grid, what do we see on the chart?
This is an aggressive expansion. The price jumped from a 24-hour low of $0.17 to $0.19. That is a wide-range candle. We are approaching the $0.20 high from the last 24 hours. If it closes above $0.20, we enter uncharted territory for the immediate time frame. The volume profile on this move is steep. It's not a slow grind. It's a sudden influx of buying pressure.
I'm cautious here. My flow data flags XLM as having no fundamental catalysts other than general rotation. This looks like a short squeeze or a speculative bubble forming on low float. Unlike Solana, where we have actual usage metrics, XLM's move is purely monetary inflation of price. It's a volume anomaly. Once the shorts are flushed, who is left to buy?
CIPHER is right to be worried. Combine this with the geopolitical noise. If the 700% Iranian outflow spike is partially attributed to payments rail speculation on XLM, this rally is built on geopolitical anxiety. As soon as that news cycle fades, or if regulators crack down on those specific flows, this $0.19 level could evaporate. It's high-risk speculation.
Yet the market doesn't care about your caution right now. The sentiment is skewed. People are looking for the next 12% mover, and XLM is providing it. The extreme fear in Bitcoin is fueling the greedy behavior in XLM. It's a transfer of risk appetite, not a creation of wealth. So we have a safe but stagnant Bitcoin, a strong Solana, and a speculative XLM. Now, let's look at Cardano. Cardano is up 6.12% to $0.15. CIPHER, why is Cardano moving?
Similar to XLM, it's part of the infrastructure and utility rotation. Investors are tired of the Bitcoin stagnation and are spreading bets across mid-cap layer ones. Cardano is benefiting from that spread. However, note the contrast. Cardano is up 6%, while BNB, a major exchange token, is down 0.42%. Money is leaving centralized exchange ecosystems and going into open-source chain ecosystems.
Technically, Cardano is challenging the $0.15 level. It's very close to breaking that intraday high. If it clears $0.15, the path is open toward the previous resistance zones. But I'm watching the volume. If this move stalls at $0.15 without expanding volume beyond the current $79.27 billion total, it could easily reverse. It's a breakout attempt, not a confirmed breakout yet.
And don't forget the mining stress. Core Scientific disappointed in their Q4 results. Miners are often early indicators of network health. If miners are stressed, Cardano's security model, or whatever model it relies on, could face long-term headwinds. This rally feels disconnected from the underlying health of the network's participants.
Good point, network health matters. Let's check the laggards for a second. Uniswap is down 1.38% to $2.73. BCH is up 4.52% to $203.56. Why is Uniswap underperforming while BCH is climbing?
Uniswap is a decentralized finance governance token. In this risk-off sentiment, governance tokens suffer because they offer no yield and high regulatory risk. BCH, however, is trading as a legacy store of value alternative. Some capital is rotating out of speculative tech and into cash-like crypto assets. It's a defensive rotation within the alt space.
Technically, Uniswap is failing to hold the $2.85 level. It's trading at the bottom of its 24-hour range, $2.73. It's losing momentum. BCH, conversely, is holding above $200, testing the $208.75 high. It's showing relative strength compared to the broader decentralized finance sector.
I'd argue BCH's move is also suspect. It's often correlated with old-school hard fork speculation. Unless there is specific on-chain activity driving BCH, this 4.52% move is likely just residual speculation. Don't mistake it for genuine adoption interest.
Understood. Let's wrap up the asset analysis. Apex, tie this together. We have Bitcoin stagnation, Solana strength, XLM speculation, and Cardano rotation. What is the market structure telling us?
The market is in a state of fragmented liquidity. Grid highlighted that Bitcoin is consolidating at $58,609 with no momentum, and CIPHER confirmed that futures demand is at 2024 lows. This means the institutional engine is off. Consequently, Pulse noted that sentiment is at extreme fear, 14/100, which usually kills rallies. But we see XLM and Cardano ripping higher. This tells us that retail and speculative capital are bypassing Bitcoin entirely. They are chasing the safe haven alts, Solana, Cardano, and the speculative alts, XLM, while ignoring the broader macro fear. The danger, as SPECTER pointed out, is that this rotation is driven by geopolitical noise and short squeezes, not fundamental accumulation. If that noise subsides, these alts could correct violently.
So the takeaway is, Bitcoin is a placeholder and alts are playing musical chairs. What's the key watch for tomorrow?
Watch the PayPay IPO news. If that $1.10 billion inflow hits Binance/Japan, it could provide the liquidity shock needed to lift Bitcoin out of its $58,609 slump. Until then, expect continued fragmentation.
To summarize, Bitcoin is stuck in a low-volume consolidation at $58,609 amid 2024 low futures demand. Meanwhile, the market is rotating heavily into high-beta alts like XLM, plus 12.2%, and Cardano, plus 6.12%, driven by speculative flow rather than institutional backing. The Fear and Greed Index remains at 14, suggesting underlying fragility beneath these altcoin gains. Stay wary of the geopolitical noise impacting stablecoin flows. This has been ShadowQuant Crypto Edition. Check your positions, manage your risk, and we'll see you in the next session. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.